Hi, my name is Adam Bergman. I'm a partner with the IRA Financial Group. Today I want to discuss what is ROBS? What is the Rollover Business Startup Solution? It's an acronym a lot of people have heard, especially if you're looking to buy a business or a franchise and have approached business brokers. You've probably been asked, do you have retirement funds? One, and if so, talk about the ROBS. And I got a lot of questions on the ROBS. It's a strategy I actually didn't start working with until about 2011. Why? Because prior to 2011, there wasn't much guidance from the IRS. Basically, the ROBS takes advantage of an exception under 4975D13 that allows a 401k to buy corporate stock, also known as qualified employer securities. So basically, what you have is you need a C Corp. An LLC, an S Corp, a partnership doesn't work. You need C Corp, number one. Then you need a 401k, number two. An IRA doesn't work. It needs to be a 401k because it needs to satisfy the definition of under 4975 D13. Usually the rollover, people will send their IRA or 401k money into the 401k, and the 401k will buy stock in the C Corp, which is called a qualified employer security. The reason it cannot be an LLC or partnership is the definition of security means stock, and an LLC is not, a unit in an LLC or an interest is not satisfy the definition of stock. So you need, number one, the Corp, number two, the 401k. 401k buys stock in the C Corp in return for shares. And essentially this was used, put in the tax code really to help people that worked at Ford or GE to use their 401k money to buy stock in the company they work for. But like everything else, a bunch of tax professionals got wind of this and started massaging it around and said, well, if it works for GE or Ford, why won't it work for a startup? And in the late 90s, early 2000s, it started to gain popularity where you'd see startups, franchises looking to buy, an individual looking to buy a small franchise would take their retirement account of 50, 100, 200 grand, roll it into a 401k, newly established. So you'd have NewCo here, newly established, NewCo 401k. John Doe would roll the IRA to NewCo 401k. NewCo 401k would own the NewCo. So you'd have the 401k as the shareholder, maybe some other people here. You'd have the corporation with all that cash, and then the president and the 401k participant would be the employee and president, take that money, buy the franchise, and everything would be a regular business. Before 2010, all we had was a memorandum the IRS issued in 2008. Basically, the IRS outlined a lot of their concerns. Number one was compliance. They felt that a lot of people were abusing the structure. They weren't buying businesses. They were just, the money was kind of left in the C Corp, and people just used it as a personal piggy bank to buy cars, do whatever they needed, pay off loans, and no business ever materialized. Number two, plan benefits were never being offered to employees. The plan was kind of hidden from employees, just used as a retirement investment vehicle to do the structure. And they felt, number three, the 5500s weren't filed, and there was just a lot of abuse. So when I read that, 2009, I just said, you know what, I'm going to wait. I don't feel comfortable. I don't want to put clients in these situations. August 2010 is the next time we got some IRS guidance. There was a public forum. Basically, I participated on it, and the IRS basically said, listen, it's legal. It's based on a definition in the Internal Revenue Code 4975D13. We can't stop it. We don't like it. Why? Too many businesses are failing. There's a lack of compliance, and there's problems. So they basically said you need to work with tax professionals who can help you and assist you. I've written a book on this called Turning Retirement Funds into Startup Dreams. It's key to understand the compliance issues, but there's a high failure rate. I mean, there's a big risk in owning a business. Seen 55, 60% failure rate within 3 years. So you need to be concerned if you're doing this, you want to talk to professionals, you want to make sure you have a business plan and you know what you're doing because there is risk. And that's the big reason why the IRS doesn't like this is you have to understand, you may not realize, but the IRS is a partner in your retirement account. When you hit 70 and you have a pre-tax retirement account, you have to pay about 3% in RMDs each year, requirement minimum distributions. Well, 3% on 100 grand is 3,000. 3% of zero, zero. So they're concerned if you do this and you make a bad investment or bad business deal, you got zero, they're getting zero. And that doesn't interest them because the retirement accounts, it's a $29 trillion industry. They need the money. They're counting on it. Treasury's counting on it to fund all kinds of programs over the next 30, 40 years, and their budget counts on it. So if more and more people are doing this and doing bad business deals, it's not something they're very happy about. So that's what ROBS is. It's basically a C Corp, a 401k, 401k buying the C Corp stock. The C Corp then uses that money to buy the business. The individual 401k, which is the IRA holder, is an employee, and they run the business like any other business. They file 1120, pay corporate tax. They can dividend the money up to the 401k tax-free as a dividend, or keep the money in the company for retained earnings and reinvest it. But it's a way to use retirement money tax-free to buy a business. If you did not do the ROBS and you did what Ellis did in the TC memo in 2014 and basically did a prohibited transaction because you used an IRA to buy stock, you would not satisfy the definition of qualified employer security under 4975D13. You need the 401k and the C Corp. If you did a self-directed IRA to buy a business you are involved in personally, you know from my prohibited transaction videos, you'd be in trouble. So this is the only way you can, other than the $50,000 loan, which is the only other way you can do a prohibited transaction legally, this is really the only other way you can use your retirement money to buy a business and be involved personally, or have a disqualified person involved personally. If you don't want to be involved personally, you're going to invest in a friend's business, self-directed IRA or solo K is perfect. But if you want to actually earn salary and being personally involved, ROBS if you need more than 50K. If you need less than 50K, solo 401k loan is a great feature. But call us. There's tons of things to discuss on the ROBS, Rollover Business Startup. I can give you my thoughts on it. 800-472-0646. You can email me directly at Adam B, A-D-A-M, B as in Bergman, at irafinancialgroup.com. Thanks for watching.